Hello traders, good day. I am Emeka, and the purpose of creating our YouTube contents is to provide you with the information you need and the skill you need to become a profitable Forex trader. All right, happy to see you again today. Today I've brought you an important subject in this business of Forex trading, and the topic is 10 great ways to manage your emotions as a Forex trader. But before we get into the topic, I want to ask that you please subscribe to my channel, like our videos. Also, you can also turn on the notification bell on just down below so that you can be able to be alerted once I post a new video. All right, these are mentorship contents and I'm giving you all for free. Okay, just support the channel by liking our videos, share our videos with your friends, and also you can also join our free signals group. The link to this is in the description box of this video. All right, let's get into the business for today. 10 great ways to manage your emotions as a Forex trader. This is actually a trading psychology secret. All right, now, why emotional stability? What is the importance of emotional stability or good trading psychology? I tell you, Forex trading is an emotionally draining business, extremely emotionally draining. And if you are not emotionally stable, you make the wrong decisions in your trades and you lose money. You're going to lose money. Okay, one of the greatest or the most important secret to Forex success in Forex business is good emotional psychology or good trading psychology or a stable emotional condition of the trader, because the market will drain you emotionally. You see a trade going in your favor, in your direction, and all of a sudden the trade loses. All right, and you've done all your analysis, everything you needed to do, you ought to have done, and you are very sure in a way that this trade was going to work out, and you lose that trade. So if you are not emotionally stable, you might want to get into the trade to another trade without doing your analysis, without taking the setups you are supposed to take, just in a way to recover your losses. And when you want to do that, you lose more. All right, and you lose more and you lose more and you lose more. You need to be emotionally stable to follow your trading plan accordingly without cutting corners. You need to be emotionally stable. You need to know how to take losses. You need to know how to take wins. You need to be stable emotionally. All right, yeah. So that emotional development, a good emotional development is one of the greatest secrets, one of the greatest keys to success in this business, aside risk management and having a good strategy. All right, it's number one, emotional psychology. Now, there are 9 ways I handle my emotions effectively while trading Forex, and you can adopt these ways too. Number 1, use good risk management. All right, risk what you are comfortable losing. Okay, don't risk more than you wish to lose. Do not, because regardless of how detailed your analysis is or how top-notch your strategy is, you can still lose sometimes. No 100% win rate in this business. All right, nobody can predict what will happen 100% of the time. So 1% risk per trade is industry standard. If you use a 50% win rate, if you are using a strategy that has a 50% win rate and you use a risk to reward ratio of 1:2 at least, all right, with a good risk management, I tell you, a good trading psychology discipline, you will be a profitable Forex trader. Although your wins might not, your reward might not be much, but if you are consistent with your risk, you will be a profitable trader over a large sample of trades. Once you start seeing a feeling of fear in any trade, it's a sign that you risk too much on the trade. Okay, once you are in a trade and you are afraid, then that shows that you have over leveraged. So do not over leverage. Risk a very small part of your account, a very small portion of your account, very important, so that when you lose, whether you win or you lose the trade, you will not be affected emotionally as such. All right, that's number 1. Number 2 is use a good strategy. Okay, do not use any strategy you have not backtested. You must backtest a strategy. Don't get a new strategy and you enter into a live market. That is the recipe for failure and for pains. you must check the historic data. How has this strategy played out in the past in your charts? There are several automated backtesting software you can use to backtest a strategy, or you can do a manual backtest. Go down the years on your chart and see how did this strategy play out. How many times does it win in 100 sample of trades? How many percentage wins did the strategy win or lose? What is your percentage wins or lose? All right, or losses? You need to know for each strategy, and this gives you some form of confidence and assurance that even when these strategies encounter losing streaks, you would be emotionally stable, knowing that your wins are coming. And over a 100% sample of trades, your wins should be able to cover your losses. All right. So personally, my strategy has over 70% win rate. You know, I'm a demand and supply trader, institutional smart money trader. All right. So that's why I still believe in my trading strategy. Even when I have losses, I still believe in my trading strategy, because I know my strategy has an edge in the market. You need to trade with a strategy that has an edge. Else, that will be a recipe for failure, and you will not have some form of confidence, and you start doubting yourself and your strategy when you encounter losses. All right. So number 3, stop babysitting your trades. Stop watching over your trades every time. Place your trades and go and do other things. But you see, scalpers might not be able to do this because they trade on the 1 minute or 5 minutes charts. Okay, but stop watching over your trades. Place your trades, set your stop loss, set your take profit points, and leave your charts. Close your charts. Stop watching your running profit or loss. Let the market do its job. Let your backtested strategy fight for you, and let your risk management, which involves position sizing, good position size and stop loss, protect you. Go and rest, my friend. Leave your trades to run. By being there, do not change anything. You have already placed your trade. You have done your analysis. You have placed your stop loss, your take profit points. Leave your trades to run. Because I've seen cases whereby I placed my stop loss, my take profit, and I left my trade. I entered actually in buy limit or sell limit. And when I come back to the trade, I've seen that there have been a time when, or several times, that the market would come close to my stop loss, almost triggered my stop loss, and revert back and go to win. But if I was watching those trades, I tell you, I may have maybe closed the trade when the price got close to my stop loss. All right, so that's why you need to stop babysitting your trades. Now, number 4, take partial profits and break even when necessary. Okay, you feel better when you have taken some portion of your trades. Okay, some portion of your position in profit. You feel much better. Your trading plan should incorporate a profit-taking strategy. You should know at what point in a trade you should take out some percentage of your profits and break even in order to have a risk-free trade. You feel much better when you have taken partial profits and when your trade is running risk-free. You feel much better. You're emotionally more stable. All right. It plays a good role in your emotional stability during a trade. So learn to take some profits. You need to have some partial profit points when you are planning your trade, and respect it. Do not be greedy. Respect it. Okay. But do not take profits too soon, because if you take profit too soon, you'll be having a negative impact on your risk to reward ratio. All right. So number 5, use a stop loss. Always use a stop loss. I've seen several traders that do not use stop loss, and one of the recipe for blowing accounts is not using a stop loss. Never trade without a stop loss. It can be suicidal. And don't move your stop loss during a trade. Never use a mental stop loss. These are recipes for failure. Nothing in this business is 100% sure. One trade shouldn't make or break your trading career. Therefore, you need to risk appropriately in each trade. And how to risk appropriately is to use a stop loss. If you use mental stop loss, you are most likely not to respect it when price comes close to your stop loss. You might want to move it and thereby losing more. So please always use a stop loss. Then number 6, don't overtrade. You see, I don't overtrade personally. In a week, I might take like 5 to 7 or at most 10 trades in a week. In a day, I don't take more than 2 trades in a day on the average. All right, if you win 2 trades in a row, you can stop trading for the day. For those of us that are day traders, because once you have wins, you are emotionally happy, and that might cloud your judgment to do a proper analysis in the next trades, and that might be a recipe for failure or a loss. All right, if you lose 2 trades also in a row, you might not be in a good emotional condition to take more trades, because you might take a low quality trade in a bid to recover what you just lost. So you can stop trading for the day as well. When any of those 2 things happen, you win 2 trades or you lose 2 trades, it's not a must, but I'm just giving a recommendation. When any of these 2 things happen, you may not be able to make better decisions because you are either too happy or too sad. So take a break for the day until next day. Do not overtrade. All right, do not overtrade. Don't do revenge trading. Don't overtrade. See this as a business. You need to have your maximum loss per day, maximum loss per day, maximum wins per day, maximum loss per week, maximum wins per week. These will help to regulate your emotions and help so that you can be a better trader, and so that you can be able to make good decisions in your trading. Number 7, incorporate using limit orders in your trading system. Stop or buy limit orders in your trading system. This is not a must. Actually, it is not a must, but over the years I've seen that it has helped me. Over 90% of my trades are entered by limit orders. Over 90%, in fact over 95% of my trades, I enter them on limit orders. I place buy limit orders or sell limit orders. I plan the trade ahead of time. I set my entry points and my exit points, and I get out of the chart. That is how I work. That is how I trade, and it has helped me. My emotions are under control most time because I use limit orders. So I don't just enter because I don't enter a buy trade because I see a buy candle. No, I don't enter a sell trade because I see a sell candle. No, I plan ahead of time my entry points. I enter in a good price, in a premium price. I enter each trade in at premium price, cheaper price for me, and I do this by means of limit orders. So limit orders like sell stops limit, buy stop limit can help you to plan your trade ahead of time with the best risk management. I plan the number of pips or number of the percentage of my account I want to lose, okay, or win. So sorry, I'm trying to risk to in this trade. I plan them ahead of time by using limit orders. So you place your limit orders, forget the trade, shake your trades later. Okay, you take your trade later, shake your trades later to see how it's faring. All right, so incorporating limit orders can also improve your trading psychology. Again, avoid trading the lower time frames. This might not be applicable for everybody, but for me, I've seen that it's very important. Forex trading is a long-term business. Is a long-term. If you want, some of us, we are looking for financial independence, and we want to. Most many of us want to leave our jobs, 9-to-5 jobs. That's why we are getting into Forex. But you are living a job. You are living in some form of slavery kind of a job, and you want to enter into another kind of form of slavery by trading the lower time frame. That is how I see it. The goal is freedom, financial freedom, and stress-free life. So when you trade the lower time frames, you are basically overworking yourself. You're mentally draining, and I tell you, it's not good for your emotions. So most professional traders trade from the hourly time frame and above, the H1, H4, D1, some even weekly time frame. Okay, these are the most frequent time frame that among pro traders are more suitable for your emotions. To me personally, for example, I get into my trade, I base my trading decisions on D1 and H4 setups, and I get my entries. I base my trades on D1, H4, and sometimes H1 setups, and I get my entries on the lower time frame, like 15 minutes. All right, time frames. So trading the higher time frames will help your emotional stability. It does, because it helps you to plan your time. It gives you time to plan your trades. It helps you to avoid the noise. All right. So number 9, see losses as part of the business. All successful traders lose, but we win more than we lose, and this makes us profitable in the end. We have a net income always at the end of the week or month, so don't be afraid of losing. You need to see losses as the cost of doing your forex business. Losses are part of the business. Every business on the planet encounter losses. In like manner, forex trading. So you need to see losses as part of this business. And when you have this mindset, when your losses are regulated, calculated losses and risk, you have a better psychology or better emotional psychology about this business. Number 10, and finally, always think in probabilities. Forex trading is a game of probabilities. No strategy guarantees 100% win rate. Trading results are random in the short term. Okay, if you throw a coin, you might either have a head or a tail. Once, if you throw a coin once, it's a random. Nobody can tell how many times. Nobody can tell whether it's going to be a head or a tail. All right, but when you throw a coin 100 times, you might be able to predict, okay, how many heads or how many tails you have on average. Okay, so it's whatever a large sample of trades. If your trading system has an edge, you will be profitable if risk is kept constant. You'll be profitable if your risk is kept constant. 1 hour constant risk per account, or let's say 1% risk per account, okay, per trade, and you maintain this 1% risk, and you trade the system 100% of the times. I tell you, 100 times your trading edge will play out and make you profitable if your risk to reward ratio is also good and your risk is kept constant. Okay, so your trading results are predictable over a large sample of trades, but random over a short sample of trade. That is why you need to think in probabilities. If you encounter 1 loss or 2 losses or a losing streak, it shouldn't make you to abandon your strategy or to over leverage in order to recover. No, you need to keep risk constant. Over time, you would recover your losses and also be able to make profits if you are trading with a good strategy and also keep risk constant and use a good risk to reward ratio per trade. All right, so in conclusion, you should be emotionally stable while trading. No excitement whatsoever. Professional traders trade like robots without emotions. Trading is very important and is about good decision making. If you are too happy or too excited or angry while trading, you can't make the right decisions. Stop trading immediately once you sense any of the above extreme emotional states. Take a break until you're emotionally neutral. Take these 9 rules to heart. Okay, these 10 rules. These 10 rules have helped me. There are 10 of them actually. They have helped me, and I've been able to excel in my trading so far. I've been able to excel. So thank you for viewing. Please subscribe to our channel, like, and share our videos. The link to our free Telegram signals group is in the description box of this video. Until next time, I wish you a happy trading. Feel free to contact me if you need a private mentorship. My contact is in our description, is in the free Telegram signals group. My contact is right there. So please keep supporting our channel, liking our videos, subscribing, sharing, and together we'll succeed and continue to succeed. Thank you, and do have a great day.